Hello and welcome to my channel. I wanted to share this quick video with you today to share a recap of a trade that I took in the week because I experienced a certain frustration that I believe a lot of you may be experiencing, and I think this video will really help you out. Now I'm going to try and keep this brief because I've got a lot on today and it takes a lot of time and energy to make these videos for you. So if you are enjoying this, please let me know by hitting the like button and don't forget to subscribe to the channel. This video is indeed recapping a red trade. Partially a red trade. I had two positions open and I took partial profits on one, but the other one I made a rookie mistake and forgot a key piece of information, and that's what I'm going to talk through with you. So this trade was taken on Wednesday and it was taken on USD Swiss franc. So I've taken my charts back in time to when I placed this trade. The trade was originally placed on the Tuesday, but it hit its point on the Wednesday and concluded the trade. So this is recapping a live trade that I took in the markets, and I was day trading the New York session. Trading Forex, trading USD Swiss franc. So let's just zoom out on the charts here and give you an overview of price action. I'm going to remove this indicator for now. There we go. There we are. So on USD Swiss franc, on a larger time frame perspective, we have been coming down in a downtrend. We got a deeper pullback here last week, and then we made a new low down here. And this week for USD Swiss, price has been pulling back. So we've got a pullback here. We couldn't break the low, another pullback here, and we're kind of making this diagonal wedge pattern here. Obviously, the big question when price is consolidating in this way is, as these peaks get tighter, are we going to see a breakout to the upside or to the downside? And I guess the important thing is that overall, on the larger time frame perspective, we are in a downtrend. But when I placed this trade, it was on the Tuesday, and it was just down to a couple of reasons really. Trading the New York session, time theory is a large part of my strategy, so I'm aiming to scalp a short movement, and I'm going to add my previous daily low and previous daily high indicator. And you can see on the Tuesday morning it broke above the previous daily high and it closed, and it came back down, and intraday market structure kind of followed this path. We got the breakout, we came down, we couldn't break this low here, bar push up, we couldn't break the high. So during the London session, we just kind of consolidated down a little bit. And then into the New York session, it did actually close below the current intraday low. So my first thought was that it was going to go for shorts, until I realized that we had pulled back into this structural area from the previous day, from the Monday. And then I got the confirmation candlestick signal, which was this very large momentum signal that came in at 3 o'clock. But let's explore this previous support. Looking back into Monday's price action here, the low of Monday, which is also the weekly low, using the bodies only, to the current intraday high, I dropped my Fibonacci and it brought up these 3 areas of optimum trade entry right here. This is where price pulled back to during this New York session, when we got this large wick rejection, and then immediately we got this big bullish momentum candle pushing up. So it was after this pattern here at this key daily area that I decided to set my long. I had a tight 10 pip stop, and originally I set a 1.5R profit target, but I took 2 half-size positions, so they were both at the same place, except for one position I had a very large target for. So what I was thinking was that as we were consolidating up, I was expecting to get a deeper pullback, long-term speaking, and short-term speaking, a breakout. So I was expecting price to kind of do something like this and then push up with momentum, breaking these points. And so for my runner target, my longer target, for my second position, I was actually aiming for something like a 10R return, aiming to retest this area here. So I had 2 positions open. Now, on the Tuesday, if I just play this on a little bit for you, you can see that price pushed up and my first position got hit here. So Intraday speaking, that was a good scalp. It worked out and that was great. Now I got to that point where I was in my second position, my runner overnight. Not something I usually do because I prefer to day trade, but on this occasion it made sense, so I held it. Then the next day began, the Wednesday, and the biggest mistake that I made, that I think a lot of you may make as well, especially as you start right at the beginning of your trading, is not taking into account or even forgetting the impact of the fundamentals, the major news events. I trade the major news events when I sit down to trade, but on this occasion, as I was holding a position from overnight, on the Wednesday morning, I wasn't on the charts at all. I wasn't trading. I had both of my boys, my preschoolers, full-time, and we went out and did our usual routine. So we were busy all morning, and so I forgot this. I've been trading with the prop firm, the 5%ers, for some time now. As a prop firm, they are a great option if you want to trade a larger capital, where you can trade one of their account sizes and you both take a share of any profits that are made. But they don't stop there. As well as offering account sizes for trading, they also offer these extra features, including live trading room, free webinars and workshops, and one-on-one performance coaching. They have 3 different programs that they offer to traders: the Hypergrowth, High Stakes, and Bootcamp program. I'm currently funded with the Hypergrowth program, so I am trading that live account with the 5%ers and taking a split of profits that are made. And I'm currently enrolled in the High Stakes program challenge as well. And my favorite feature of the programs that the 5%ers offer that differ from any other prop firm out there is the fact that they have removed the time limit, which means that you have an unlimited amount of time to pass the program. This is a massive game changer, and it can really help you to avoid falling into a stressful situation when you are trading. Let's face it, trading can be stressful enough. If you want some more information, or if you're ready to have a go for yourself, do check out the link below in the description. Forexfactory.com has a brilliant free feature where you can see a list of all of the upcoming economic news events due out. It is really essential if you trade Forex to know what is due out and what can impact the markets. And looking at the Wednesday, the day that I'm recapping with you, 1:30 p.m. US dollar core CPI, Consumer Price Index. It's a very, very important piece of news that gets released monthly, and this can really provide a lot of volatility and movement in the markets. And on the Wednesday morning, I completely forgot to take this into consideration with my open position. Ordinarily, when I trade and news is due out, if I'm in an open position, I will usually trail a break-even stop, or maybe even close the position completely, incorporate alerts, so that I know that my position is protected. Above all else, you want to protect your capital rather than getting greedy. But on the Wednesday, I wasn't even looking at the charts and I completely forgot, and this is what happened. During the London session, we pulled back and we retested my entry, pushed back up again after the London session, but you may notice this very large candlestick here, a huge bearing engulfing parabolic candlestick at 1:30. That's the CPI news release because it was negative for the US dollar, as you saw before on Forex Factory. What I should have done was probably have a break-even stop after this, or maybe even on the Wednesday morning, check the position, got out up here in the London session with a good amount of profit. That would have been the best thing to do, but I didn't do that. And unfortunately, the thing with news that people forget is it's not just a risk of the trade going against you because of that news release, because of the fundamental aspect of it, but also it's important to remember that during a high impact news release, the spreads usually go very large, which can produce slippage. And that's what happened to me. So price came down, it hit my stop on my second position, but because of the slippage, it actually meant that I had double the loser, which was really unfortunate. It didn't get out at my stop loss, which was at the 82.06 level. It got out down here somewhere because the market was moving so quickly. So it took out my trade and I basically lost the profits that I made from the first trade. Very frustrating, especially when I could have closed this position in the morning with a nice profit, which would have doubled my wins for the day. And this is just a reminder for myself to remember the importance of news. The fundamentals, they are so crucially important when you have high impact news events due out. You've got to honor them, you've got to be aware of them and incorporate them into your trading plan. Now that's okay, because with trading, we win some, we lose some. We cannot guarantee the results, just the process that we follow. And the next day I managed to capture a really nice win day trading the DAX, which I'm going to share with you in a separate video. So make sure you are subscribed with the notification bell ticked so that you can catch that video. If you are new to trading, if you're at the beginning of your journey, I have launched an ebook, Forex Trading 101. It's a complete guide for beginners. So if you want some more information about getting started trading, do check it out. There's a link below in the description. Meanwhile, if you've enjoyed this video, let me know by hitting that like button, and I will catch you in my next video. Thanks for watching. Bye.